All right, stock market analysis, weekly and daily analysis we're going to look at with a focus on the momentum conditions. First, I want you to look at this replay from December 2nd, 2002. This is a replay from December 2nd, 2022, as we look at the intermediate analysis in the stock market at that time. We're showing this because we have had a number of people that have been confused about the analysis we have recently shown, and we wanted to bring this forward for clarity so you could see what we said literally a couple of months ago and how that played out in January. So if this were to follow the pattern, you would get some gyration right in here, a pullback somewhere around near the 386 level, and then that would occur sometime before year end. And then another upside move to try to test these resistance levels here again. Now, this is an upgrade that we gave it today because now that we've gotten up to the VTL and past this 406 level, the likelihood is pretty good that after this pullback, the next peak will be above this peak. So we've upgraded that because of the probabilities based on the information that comes out of the cycle patterns in here. So again, based on the weekly, a pullback here into sometime in December, and then another rally, and then this is where the big period of risk comes in from sometime January through March, where there's a potential for a decline that would be very severe. Okay, now what you saw from from December 2nd was what our projections were. And now let's take a look at how that actually played out and where we are right now. And we're going to really focus on the momentum conditions because that's so important to the overall analysis. While we are cycle analysts, we do use multiple different aspects to the analysis to come up with our sum of the evidence projections that you see us do. And momentum is a very, very key part of that analysis. Let's take a look here as we look at the S&P 500. So when I did that clip back in December 2nd, that was right over here. And what I said was that I thought that the market was going to decline in this minor cycle right over here, get down to this level, which we thought would be somewhere right down over here in this timing, and then begin to move up. And we thought that it would be getting up past this level. That's one of the keys right there. And that because of this positive shape right here, did have a VTL breakout, which is a valid trend line, which is also a positive occurrence. And it got up to and past the targets we were looking for. This right over here was about 4150. That was really an outside target for us right there. And getting up here to close to 4200 was not something that we expected. I mean, why did that happen? Well, the momentum in here got very strong, so that gave you a bigger magnitude advance. You see right over here, this is the askSlim reversal scout. And where it turned up over here and then the market accelerated, gave you a good sense of the importance of looking at momentum. Look right over here where the reversal scout turned down and you were in this negative corrective period. Look right over here where it turned up early in these cycles, and then you got the big upside move. Here it turned down right over there, and it set up the big downside move. So right now, the conditions in the stock market, based on momentum and based on cycle configuration, the configuration being the likelihood that the next correction is going to finish well above where this level was last October, that sets up the highly likely that this was the bear market low, and that the next rally out over here will probably get to our targets up near 4,300. This major level right over there is about 4,312 on the S&P 500. 4,300 was the level that we showed when we did our big picture analysis. Now, to get a sizable decline in here, that would be, we would want to see momentum turn to the downside in here to tell us. As long as momentum is strong, it's going to be very hard for the market to give up a lot of ground. Now, when I show you the daily chart, you will see that you see how these upside projections up here to this level or this level. Now, this is 4,200. This is about 4,237, 4,240, right in that level. The reason this comes out here into February is because of the shape of the daily cycle. So regardless of the fact of what we believed that the cycle patterns were and what they were telling us, whether it be on the intermediate or the longer term, we still need to look at the sum of the evidence, everything that we're looking at. And we've been saying that the momentum is strong and it was likely to be moving up in this time frame. Also, we talked about the fact that the implied volatilities, or the VIX, were likely to not have their trough until late in January or even early in February. And that looks like it might be happening now. So this strength that we see in here is likely to end somewhere in here and then give you the correction right there. Remember that these yellow oval periods are where there is a nesting of the cycles or corrective periods coming. But again, our earliest projection, which was to get under this 3,500, and you could see this red faint line coming down here in that older projection, that is now a low probability based on the magnitude of this move, based on the shape of the cycle, getting up through the minor 78.6 as it did right over there, says that it's very unlikely that the decline is going to get below these support levels. Still, there is one likely to come in this time frame, which we have all along said was going to be into sometime in March and potentially out into early April. We still think that's the case, but the downside targets right now are around 39.25, and this one over here is 38.42. That is where these downside projections are, and even though we've had this upside rally, the timing doesn't change. The window for that correction really opens up in the next couple of weeks, and then we see the likelihood of that coming. Now, if the momentum stays positive during that period, it's going to really prevent this decline from being significant. And you can see right at the end, the last 3, 4, 5 weeks, this was just 2 weeks right over here. That's where the biggest declines come. So the big decline may not come actually out into March when the momentum finally does turn lower. So that's a look at the intermediate pattern right over there. And following what we said December 2nd, just brilliantly, just amazing. Just because it got a little bit higher doesn't mean that anything was wrong about the analysis. Here we see, as we look at the shorter term on the weekly cycle, what's happening is that it's really getting swamped. Now, what does swamp mean? Here's the slim ribbon, and you can see where it turned positive right over here. Here's the slim ribbon PO, where it gave you an upward resumption signal right over there and stays green, positive. This says that along with the weekly upside momentum, we have daily upside momentum, intermediate and short term upside momentum. And because it rallied so far and so long, it only leaves a few days for a pullback here. Worst case is probably getting into the slim ribbon, which is often what happens in a swamp cycle. That's about 40.90 right over there. That would be in the next several days. Well, that doesn't even seem possible, does it? Maybe it only touches the 8-day moving average over here and gets down to the low 4100s in the next several days, and then likely to move up again. Here's that 4200 level there. There's that fib extension level of about 4237, and that comes out into the February time frame where you get that rally. This is extended higher and longer because the market is telling us so. Momentum very, very clear in here. You could see the minor cycle that when it came down and finished right over here, it was still positive momentum, and you get that upward signal there. So we have this multiple conditions in here of very positive momentum. And for those that would dare to take any kind of a sizable short side trade, then you're really going against the sum of the evidence, which if you've been part of our beta test for the market condition indicator, or you've gotten the information from Matt every single day on momentum conditions, you would have known that the cycles were stretching out on the upside, or at least there was a a possibility for that to be happening because that's when you get the greatest upside impulses. Again, as you look at this, now looking at the side by side, this is projecting a few days of coming to the downside in here, maybe not getting very far because this is getting swamped by the upward momentum that is super strong on both of these, and then beginning to move up again. This is where that period of risk comes in. For the decline, the support from moved over from the weekly chart again is right over here, which is at around the 39.25 level and 38.42. Those are the same supports right over here, and that's what we expect to happen sometime out into the March timeframe after getting this rally and then setting up what would be the next move up in what does appear to be actually the bull market of 2023. As we said, it is likely that the stock market was going to have a favorable year in 2023. If you watched our big picture analysis, year-end shows that we did. So this, as you can see, is where we are. Positive conditions that we're looking at, a likely big pullback into March, and that being a very significant buying opportunity. Following just amazingly close to what we said on December 2nd with the momentum and configurations and translations of these cycles all giving very positive information. And to get this correction, you're going to have to see some kind of a deterioration, which is what we will be looking for.